Welcome to Chairman's Briefing, your source for the week's top mining headlines. My name is Rachel Lee. We may be in the early stages of a significant shift in sentiment amongst retail investors around the globe. Analysts from the World Gold Council reported that global gold-backed ETFs saw their second consecutive month of inflows in June. Analysts said that in general, lower yields in key regions and non-dollar currency weaknesses increased gold's allure to local investors. According to the report, global holdings increased by 17.5 tons, valued at $1.4 billion last month. Inflows were widespread, with all regions seeing positive gains except for North America, where there were mild losses for a second month. Although North American gold demand remains lackluster, analysts note that it can easily turn around if the Fed start to ease interest rates. Markets are optimistic about a rate cut in September. Year to date, global gold ETFs have lost $6.7 billion, the worst since 2013. Now, when it comes to two central banks of countries that love gold, China and India, one is buying and the other remains on the sidelines. The People's Bank of China is continuing its pause on gold buying for a second month. Commodity strategist at Wisdom Tree, Nitesh Shah, commented that the Chinese are waiting for further pullback from gold prices before it resumes gold purchasing. India, on the other hand, pumped up its gold reserves. Based on calculations using weekly data from the bank, analyst Krishnan Gopal shared on X, formerly known as Twitter, that the Reserve Bank of India added more than 9 tons in June. That's the most since July 2022 and means India's reserves have expanded by 37 tons this year to 841 tons total. Where silver is concerned, many view the current setup as a coiled spring of sorts. Could we break $35 per ounce this summer? Referencing a recent surge that saw the metal bounce off support at $29 and then storm substantially higher, Fawad Razakzada, a market analyst at StoneX Group, said, "Those gains came as the metal broke out of a continuation pattern and with the dollar falling against a basket of foreign currencies thanks to weakness in U.S. data, raising investor expectations about a September rate cut by the U.S. Federal Reserve." Concerns about the French elections had also boosted precious metals' appeal last week. But after a surprise win for left-wing alliance, which helped to keep Le Pen's far-right from power, this partly explains why both gold and silver have started this week on the back foot, with European shares rebounding in a mild risk-on session. The $30 level now serves as solid support. Next, copper. Let's talk about the significant impact on supply and demand that the war in Ukraine has had on the metal. Russia's war against Ukraine is straining global supply chains. To give you a snapshot, a NATO 155mm artillery shell contains half a kilogram of copper, and Ukrainian forces are firing up to 7,000 of them each day. The U.S. produced an average of 14,400 shells a month before the war. They're expected to produce 100,000 shells per month by the end of 2025, according to Defense One, the specialist defense industry publication. Canadian mining companies are attractive takeover targets for global predators. But under a new directive as part of PM Justin Trudeau's efforts to protect Canada's critical minerals sector and national security interest, the government will only approve foreign takeovers of large critical minerals mining companies, quote, in the most exceptional of circumstances. So just what might constitute an exceptional circumstance, you ask? Well, the Canadian government had a spokesperson who declined to elaborate. If you were to quiz the mining analysts over at the Bank of Nova Scotia on this subject, they tell you that these new M&A rules will leave the nation's biggest producers with lower valuations than their global peers. Multiple sources, including CBC, dropped the following headline: Cyanide detected in creek after Victoria Gold's heap leach failure at Eagle Gold Mine. Energy, Mines and Resource Minister John Stryker said 4 water samples taken from different areas around the mine have tested positive for cyanide. While toxic levels are mostly low, fish could be affected. Stryker said that fish toxicity testing is currently underway. Meanwhile, the Natchonek Dun First Nation is calling for an urgent halt to all mining activities on their land in the wake of the slide. Also demanded is an independent investigation and a review into what they characterize as the region's most recent and potentially catastrophic mining failure. A source wishing to remain anonymous told the Yukon Star that the company will likely declare bankruptcy by September or possibly sooner. The source cited lean cash reserves and debts that includes $70 million in payables and another $50 million that it owes to the Caterpillar company for equipment deployed at the mine. Over on the TSX, the downward spiral continues as the risk side of the equation eclipses the potential for reward. Following up on a previous briefing, Ramp Metals released a final round of assays from a Phase 1 drill campaign at its Rottenstone SW project in Saskatchewan. The remaining intervals from this drill program failed to intersect the same high-grade mineralization either further down the discovery hole or closer to the top. But those bullishly inclined will argue that all 3 rogue target holes tagged gold. They'll also argue that it's still early days at Rottenstone and that the company has barely scratched the surface of this multiple target, 32,000 plus hectare company. For next steps, the company is currently in the permitting and consultation process for an extensive geophysical, mapping, and sampling program. A follow-up fall-winter drill program is being planned. Ramp Metals insiders are putting their money where their mouth is, increasing their already substantial holdings in the company via some aggressive action on July 8th. Some investors are anticipating good things from gold producers heading into their Q2 earnings announcements. With the Q2 gold price averaging roughly $2,350, we may see a few substantial beats. Among the top 3 producers, Newmont reports on July 25th, Agnico Eagle on July 27th, and Barrick on August 12th. We'll stand to watch. Lundin Gold reported production of over 133,000 ounces of gold in Q2. Ron Hochstein, president and CEO, said that the company is firmly on track to meet its 2024 production guidance of 450,000 to 500,000 ounces. And he also added, quote, higher grades and recoveries versus last quarter helped to drive the performance, along with average throughput in the second quarter of 4,669 tons per day. Wesdome's Q2 total production was about 10,000 ounces higher in the same quarter compared to last year. At Kiena, production nearly tripled compared to the first quarter. At Eagle River, the mine delivered on plan despite a maintenance shutdown in late June. The BC Court of Appeal overturned decisions of the former Chief Gold Commissioner and the Supreme Court, confirming Skeena Resources' stance that it was an error to rule that the company gave up its ownership of the waste material from the SK Creek mine once it was deposited into the Albino Lake Tailings Storage Facility. The matter will now be referred back to the current Chief Gold Commissioner for rehearing in light of the Court of Appeal's decision. COMEX copper futures surged as traders scrambled to cover their bearish bets. The sudden rally was fueled by speculative buying and expected copper shipments failing to arrive in the U.S. After hitting record highs in May due to a short squeeze, copper prices had been falling. However, the recent rally shows that traders are still cautious, adjusting their positions amid ongoing supply concerns. And you don't hear this next story every day. Vending machines stocked with ammunition have been installed in several grocery stores across the U.S. Made by a company called American Rounds, customers over the age of 21 can be verified with facial recognition software. CEO Grant Smagers told Newsweek that he's received over 200 store requests covering approximately 9 states. Mining.com published a ranking of the top 10 gold mining companies in the world based on their 2023 outputs. At number 1 is Newmont with 5.5 million ounces. This Denver, Colorado-based company cemented its position as the world's biggest gold miner last year with its $17 billion acquisition of Newcrest Mining. The deal gave Newmont a much bigger presence in Australia and Canada, adding 2 major operations in each country. Coming in second and third is Barrick Gold and Agnico Eagle. And that's all for now. Become a subscriber on YouTube if you're not already, and sign up for the Chairman's Briefing newsletter. Newsletter subscribers get the briefing first every Thursday. I'm Rachel Lee, and we'll see you next week.